Hello, good morning, everybody. It's a great pleasure and honor to be here today, especially to open the first panel this morning. And I'm also really delighted to be back in Abu Dhabi. I just flew in from snowy Switzerland, so I'm happy to get some vitamin D and sunshine. Well, we have a huge topic to tackle in the next 25 minutes. First of all, I would like to feel the temperature of the room and get your opinion as well. So, a show of hands. Who thinks in this room that the rise of family led conglomerates is a good thing? All right, okay. Who thinks it's a bad thing? Only one or two people. All right, so we have a consensus almost. Let me now, first of all, start with you, Adiba, with your wonderful orange tie. I love your color as well. I think we color match. Paint us a little bit of a broader picture of this topic. How important are family offices for global growth right now? We all know, of course, that they're a major source of investments around the world.
To understand the landscape of Abu Dhabi and the landscape and importance of family offices, one needs to understand why this decade plays a very important aspect. As we all know, Abu Dhabi has always been the house of one of the largest sovereign wealth funds in the world, and probably the DNA of investment lies with the people and the business houses of Abu Dhabi. As we all also aware, to the fact that around 60 to 70% of businesses in this side of the world is also family run. Now, in this decade, we have seen the rise of ADX, which is the investment house, the listing house here on the stock market. We've seen a lot of family institutions going into the listing processes. And what this does is that it frees up capital. Now, once it is getting freed up, you need a new source of investment that needs to be catered around. And what better format for family houses or family offices to be created than to reinvest these freed up capital? So I think it's very important that an ecosystem needs to be created today for all these freed up capital that needs to be invested, and that investment can happen through a family offices consortium as such. And I think so today we're also having ADGM, which is playing an umbrella place where both wealth funds and family offices rest side to side, where a lot of knowledge sharing on patterns of investments are created.
You mentioned a very important word, which is ecosystems. Basel, you have been working and operating here from the region for a long time, especially also now with the Abu Dhabi IPO fund. Tell us a little bit about how family businesses and offices are playing such a vital role in this region for some of our friends who are traveling from Shanghai and from Geneva and so on.
Sure. The family businesses, let me just explain that family businesses are one layer below the family office. So they are the operating assets that generate the profitability that feeds up into the family office. Now, as Rachel mentioned, they play a vital role in the economy. They're one of the largest employers within the economy. And when you think about it on a very simplistic manner, you interact with a family business on a day-to-day without even paying attention to it. So you buy your car, for example, from a family business that is the exclusive agent for that car dealership. You put the kids in school, that probably started off as a family business. You go to the groceries or to the supermarket to buy your groceries, that also started off as a family business. And so they're a force to be reckoned with from my perspective. And I wouldn't be surprised if over the next decade, these family businesses that are originated, whether from Abu Dhabi or from within the region, will become global players from my perspective.
Sriram, you have mentioned in our chat before the panel today that co-investments are really something that you have been focusing on in the past. Can you share your experience on that front? Is this still the case that a lot of family offices are, focusing on co-investments nowadays?
Yeah, sure, definitely. Generally, we as a family office, we've been investing globally for the last 43 years. We made most of our wealth partnering with best-in-class managers. So when you partner with a manager, you pay 2 and 20. And in some cases, we're even happy to pay 30% performance fee because the manager's performance is so good. And with co-investments, you don't pay fees. A lot of people make direct investments to avoid fees. With co-investments, you get the same benefit. But the key challenge is, do you get to see the right deals? because most often than not, co-investment, generally the good deals first go to best in class like endowments in US, etc. Then whatever is left over actually comes to a family office. So the key for us is to ensure that we have a side letter which clearly states that we get a preferential rights for co-invest. And to do that, we have to be the one of the largest investor in the fund, probably the largest investor in the fund who actively co-invests. So we are more focused on doing like 40, $50 million tickets and $500 million funds. Very, very hard to access, very high quality funds. Where if you think the manager can consistently make more than 30% gross by co-investing, you're locking in 30% returns with GPs. And also the better part with co-investment is we are co-investing mostly when it's a buy and build. So manager is initially buying the platform. For the add-on, he needs co-invest. And normally the smaller managers, they're happy to offer this at cost. So you're able to invest like 3 to 4 quarters after the initial platform investment is made at initial cost. So wherein the GP makes like 30-35% return, as a co-investor, you end up making much higher returns because you end up holding the investments for like 3 to 4 quarters shorter period.
You really pave the way nicely into more technical details now. So let's talk about asset allocation and portfolio construction with Adel. Adel, you're based in Khobar in neighboring Saudi. So tell us a little bit from your perspective at Al Fusan Holding. How are you constructing your portfolio and how is this currently changing with everything that's going on in the world?
Sure, thanks, Martina, and pleasure to be here. Thanks for having me. I mean, for us, we obviously as a family office in the region, and that the base has always been the operating entities. The family started its operations in 1950, but I would say about 10 years ago, the diversification element kicked in the sense that there was a recognition that you need to be able to diversify away from your core operating businesses. And my fellow panelists alluded to the idea, I think Adib just mentioned, that you have to basically free up some of the capital to diversify away. And that's what we've done. So I'd say probably much of the last 7-8 years, our focus has been to invest across the spectrum of asset classes. So that's on the private market side, be it private equity, private credit, real assets, as well as the liquid component, which is basically public equities, fixed income, and the semis, which is hedge funds. So what we've done really is try to complement our operating businesses and basically create a separate bucket. So we have two buckets, one which is the operating entities, and where our participation tends to be from an execution standpoint, on the board. So you tend to have, full management team for each and every business line, but then complement that with a bucket that's purely dedicated on financial investments. And like I said, that's across the board.
We have heard in the opening remarks by IDGM and also His Excellency and also our MC, Rachel, who has been living here for 16 years, about the attractiveness of Abu Dhabi. Adib, with Lulu Financial Holdings, you're also based here. What makes Abu Dhabi so special? I guess you're trying to lure more foreign capital, more foreigners to move here as well to this wonderful emirate. What makes it for you? What ticks all the boxes?
Well, I think so. The ecosystem ticks all the boxes for me. So for us who've been here for a long period of time, with the visionary leadership in the country and a very business-friendly approach, different platforms and the like-minded people have been attracted to this market. And it's an ecosystem that is very unique to itself. So if you look at Abu Dhabi, to the characteristics of Dubai, to the characteristics of Oman, Abu Dhabi has a very unique characteristic to itself. It's a very family-oriented setup. It has a great investment that lies in its DNA. It has a trader mindset. And predominantly today, with ADGM being established, since the last decade, we have fund managers from around the world who are coming to set up their ecosystem down here. Helps us to partner and broaden our vision. So, as rightly said, Abu Dhabi is the capital of the capital, because based out of here, you're able to envision what is happening from rest of the capital markets, and through co-investment and partnering out with different organizations, you're able to be right at the right place at the right time when it comes to investment patterns.
I love it. The capital of capital. Wow. Okay. I think that is a new government slogan now here. But what you mentioned is absolutely right. Ecosystem visionary leadership as well. What makes Abu Dhabi so different. Basil, we mentioned before today that there have been a lot of family offices going public as well. Do you expect this trend to continue? And what can governments but also regulators do to really support those offices?
Look, some of my fellow panelists here obviously have companies that are currently publicly listed or are on the way. In terms of regulation, I don't think family businesses require their own set of regulations. However, they require a sort of an incentive, if I may say. And we at the Abu Dhabi IPO fund act as an enabler in that perspective. So we're a 5 billion dirham fund. And to put it in a nutshell, our main task or our main job is to assist those companies to go from a private institution to ultimately tap into the public markets. And so we work with a variety of consultants. We partner up with the company. We institutionalize those businesses, whether from a governance standpoint, whether from a legal standpoint, if it requires restructuring to be able to set up in the ADGM. And we go through the IPO readiness and all the other technical matters that are required with the regulator. So it goes back to the ecosystem, basically, of how we speak to the regulators, to the stock exchange itself, and to the markets to assist them in their journey. What we also provide as well is we subsidize those fees. As you know, an IPO process is a very expensive process. It's a complex process as well. So as an incentive from the government or from the leadership of the Emirate of Abu Dhabi, we've decided to partner up with a variety of companies to be able to offer them that service, basically.
And is this across industries? And are you also helping them to go public and do listings overseas, like in New York or Hong Kong or LSE?
No, look, from a sector or a segment perspective, it's quite diverse. Obviously,
Yes.
we're working with a variety of family businesses born and bred here in Abu Dhabi. The listing target obviously is going to be the ADX in that instance. This is where we're Abu Dhabi focused.
Can I just
Of
add on
course.
to that one? So this particular element of support and moving is just not the factor of getting listed. It's a matter of succession planning as well for the organization. It is to bring continuity to the business. Most probably, many businesses don't need or feel the need to get listed. But why is it so important? Is because then it brings in a better corporate governance into the whole organization, and it gives a future succession planning to the whole organization, so that when the leadership at the top changes, that is the family members, who actually then want to pass it to the next generation, they'll have a better organization, a better structured organization at hand. So that is why I said this critical path that we are facing in this decade is extremely important, because this is when a lot of businesses are changing hands from one generation to another.
And succession planning, this keyword is very crucial right now. Just before our panel, I spoke to a friend of mine, and he mentioned that it's really this juncture, this critical juncture right now, where so many family offices in the Gulf, they are transitioning to the next generation. And it's an either make or break moment. Is that correct?
Absolutely.
And how critical is it to not go so well?
I think so. With the support of I think the leadership of the country has seen this ahead, and hence the support from such institutions, helping the companies to become more structured, getting them into the listing market, that is the ADX, getting key alignment of leader talents into the market, which is very important. So it is a mixture of many ecosystem that pays down here. You need to attract the right talents into the market to have the continuity of the business. You need to have the right fund managers to sit and manage the wealth once it gets unlocked. You need the right support structure to get them into the listing process. So it's a varied of matters. And I think so far we have seen things happening in the right manner, and I think so. It's always a miss and go towards till everything is done up. But as the moderator rightly said in the beginning, it's that ability to learn things from each other that is going to define this decade for us, and that's where Abu Dhabi Financial Weeks plays a very important, and ADGM plays a very important aspect.
And also cross-generational mentorship, like the old generation can learn so much from the next generation, and vice versa, of course, as well. Sriram, we have, of course, a competitive advantage of a lot of family offices here in the region, but that might not be so well known abroad. What is really the competitive advantage, and how can maybe foreign companies, institutions, family offices profit and capitalize on the family offices here?
Yeah, I'll answer this from our perspective. We as a family office, we operate more like an endowment and invest globally. What has changed the last 2 3 years is globally, like be it pension funds, be it endowments, be it charitable institutions, everyone is today suffering both from a numerator effect and denominator effect. Numerator effect because in private equity you're not getting capital distributions back, and denominator effect because of which both your public equity and your fixed income portfolio has not performed well for the last 3 years, because of which a lot of global allocators are not able to continue to commit capital on a go forward basis. And historically, best in class private equity funds, hedge funds, etc., they predominantly used to take capital from 3 4 large endowments in US, 3 4 large charitable institutions, probably couple of very niche fund of funds, and they would never come to Middle East. They would come to Middle East only after they've exhausted all the options in US and Europe. But today, what has changed is the last 2 3 years. What the Middle East has shown is when other parts of the world they're all going slow, the Middle Eastern economy has been performing fairly well, and Middle Eastern family offices have continued to commit capital. So what GPs are realizing is no, Middle Eastern LPs are not a backstop option. They're part of my core mix. So it's very, very important to have high quality Middle Eastern investors as part of my LP mix. So today as a Middle Eastern family office, if I can go travel globally, showcase to best in class managers that you're a stable, good partner, it's a great opportunity for a Middle Eastern family office to transition their portfolio from like probably a 40th percentile portfolio to top decile portfolio. It's a very unique opportunity which might be around for the next couple of years. So when you establish relationships, not just for this vintage, but for the next 3 to 4 vintages, because once you get into the thick of things, once you have this right core long-term partnerships, right, it just keeps continuing, right? Because there'll be new spin-offs, new offshoots, and you have a relationship with a good GP, right? Naturally, when there's some capacity in another good GP, you always get it. Yeah.
Now, in the past, Adel, a lot of family offices have relied on cheap leverage, right, to fuel their growth. How do you see this trend continue, especially with much higher interest rates? Will they still use that kind of leverage level?
So I get the technical question.
Absolutely,
Yeah?
you're my man.
No, I mean obviously. Look, I think this is it's a very hot topic in the sense that we've lived in an era since probably the 2008 crisis where interest rates have been so low, and that's fueled. Sriram keeps referring to how successful private equity managers have been over, let's say, the last 15 years, and that's predominantly because there's been heavy use of financial leverage. And you can borrow at near zero. Even if you make 6-7% return on your capital, that really adds up to your equity return. So that's why I think everybody has been used to such high returns, and I think the next 10 to 20 years, the landscape is going to be quite different. I think we saw the markets react in the last couple of years. One thing definitely that I think is important is anyone that's been using a lot of leverage is going to find it a bit more challenging to achieve similar returns as they did. But then again, that creates a lot of opportunity for those who have capital on the sideline. And one point I just want to add to what Sriram has mentioned, because he was saying the Middle East, or let's say the family offices in the Middle East, were not necessarily the target of managers and GPs when they used to come here. Usually they'd meet the sovereign wealth funds, but not necessarily family offices. You're seeing a change in that because there's been significant growth in that segment. And there's been a lot of sophistication and institutionalization of the process by which they invest. So I think it's going to be very interesting times. And obviously, you asked about interest rates, but obviously that's going to be a big component that will impact those who have significant leverage, but also create a lot of opportunity.
Can I add something
on
this?
Of course, Sriram, go for it.
So leverage per se, in my opinion, impacts more the larger players. There are a lot of smaller, low middle market managers who do buy and build, where they acquire platforms at 6-7 times EV by EBITDA initially and do a buy and build roll up. Here, in that case, what I've seen is they've been able to adopt to this higher interest rate environment. The way they do it is they take 0 to 3x leverage from banks at a relatively low rate. and the seller is actually today offering vendor financing, partly milestone based, partly it's just a preferred equity. So wherein the low middle market managers, like the sub $500 million managers, have been able to adopt better to this higher interest rate environment compared to the larger ones, because the larger ones, the challenge they face is one, yeah, when they pay high multiples, they have to take more leverage at a higher cost, and also the exit, right? They predominantly depend on upon IPO. The IPO market locally is very buoyant, but globally IPO market, except for some niche companies or company in specific sector, it's very, very difficult. So if you're a large private equity fund, you both have a higher interest rate and you have lower and lower exit options in today's market. So per se, it's important where you play, and there are ways in which you can mitigate this. But I fundamentally agree with Adil that next 10-15 years, the baseline returns in private equity will be lower than what it was last 10-15 years. But I believe there'll be lot more alpha. And if you can access the right alpha, probably you can partly compensate.
Yeah, the right alpha, but also the right asset allocation. Let me ask you also, what is the right asset allocation? I know this is a multi-million, multi-billion dollar question probably, but liquid versus illiquid investments, that's also always on the top of your minds. Basel, maybe?
Look, family businesses specifically, they're on the operating assets. So this is potentially more a question for the family offices, which sits one layer above from our perspective. And so I may not be the best person to answer that question for you.
Maybe Adi?
If I knew the right mix, I wouldn't be sitting here.
Oh.
But yeah, I think it's a combination of many factors.
Yes.
So you need to look at what really interests you. So putting that guidelines in the family offices, also lowering your spectrum. That's what I believe. So instead of going into large spectrum of investment, if you can corner your investment to a certain segment, it gives you more control. And once the learning grows in the organization, then try to increase the horizon of investment. Otherwise, non-understanding of a business also tends to a larger, not so profitable investments. So and then the key thing is to partner with more mature funds, in the initial times, and that's what we do. Aspect we go around, finding out, and then once we get the learning, we try to increase our percentage of investments.
I'll just add to this point. I think really the answer to this is a function of what the principals actually need in terms of their investment. So if you expect dividend distribution or a certain percentage of dividend distribution every year, then obviously the structure, your portfolio construction is going to vary, because then you need a bit more liquid. But then if you're someone who's saying, you know what, I'm okay waiting 10 years, 15 years, then you can go a bit more into the private side where you could get additional return, but then you're sacrificing that liquidity. So I think it really comes down to what the principals want and where you are in the generational cycle for the family office, and based on that you can really construct your portfolio.
We just have 1 Swiss minute left in this panel, so let me ask you one final question to all of you. Looking ahead to 2024, where do you see the best opportunities for your businesses? Maybe we start with Sriram and go all the way back.
I would say probably build best-in-class long-term partnerships with managers in an environment where I think availability of capital for GPs is scarce. So build the right partnership for the next 20 years.
Basil?
I think there'll be a continuation of the current status quo when it comes to the IPO markets. It's been there's been a nice flurry of IPOs, and I expect that to continue in 2024 on the ADX.
We're still very bullish on this market and this region as such. I think so. There's more for taking in this region, and we would like to build on the bullishness that we see in the market today.
We think we're in a trend of deglobalization, and as bad as that may sound, I think it's going to create opportunities. So I think leveraging on that is going to be important for us, and this part of the world is going to be very interesting, I think, in the next 10 to 20 years.
Let's stay here, and Basel and Sriram and Adib and Adel, thank you so much for your time. That wraps up our panel. Shukran Gasilan. These gentlemen are also available on LinkedIn and social media and via their website. So if you need any more information, I'm sure they will be more than happy to reach out to you and connect, and also have a coffee maybe later during Abu Dhabi Finance Week. Thank you all very much.
Thank you for having us. Thank you.